Hello, I'm Max Wiggins, and this is my presentation on the legitimacy of Bitcoins in the U.S. economy. Why Bitcoins? Bitcoin is a cryptocurrency and transaction platform used for online transactions. Although Bitcoin as a currency is not backed by a single government, its private backers and users value one Bitcoin at 378.36 US dollars as of December 2nd, 2014. Here's a video to give you some background info on Bitcoins and how they work.
What is Bitcoin? Bitcoin is the first decentralized digital currency. Bitcoins are digital coins you can send through the internet. Compared to other alternatives, Bitcoins have a number of advantages. Bitcoins are transferred directly from person to person via the net, without going through a bank or clearinghouse. This means that the fees are much lower, you can use them in every country, your account cannot be frozen, and there are no prerequisites or arbitrary limits. Let's look at how it works. Bitcoins are generated all over the internet by anybody running a free application called a Bitcoin miner. Mining requires a certain amount of work for each block of coins. This amount is automatically adjusted by the network such that Bitcoins are always created at a predictable and limited rate. Your Bitcoins are stored in your digital wallet, which might look familiar if you use online banking. When you transfer Bitcoins, an electronic signature is added. After a few minutes, the transaction is verified by a miner and permanently and anonymously stored in the network. The Bitcoin software is completely open source, and anybody can review the code. Bitcoin is changing finance the same way the web changed publishing. When everyone has access to a global market, great ideas flourish.
So, although Bitcoins are a great alternative answer to currency in business transactions, it does present a few legal problems that you might run into. First and foremost is the Stamps and Payments Act of 1862 that has been cited as to why Bitcoins may be illegal in the U.S. It states that an American cannot issue a check, note, or token that is worth less than a single U.S. dollar. And seeing as a Bitcoin can be broken up into increments less than a U.S. dollar, it could be said that this would lead to it being illegal in the U.S. Also, the Bitcoin's legitimacy has been undermined by its use in funding terrorism and in money laundering schemes. Bitcoin's in the news recently. In March 2014, the IRS announced that they will treat Bitcoins as property, not currency, which we'll come back to at the end of the presentation. But this means basically that Bitcoins are subject to property tax and any taxation regarding property transactions. Also, in October 2013, the FBI shut down the Silk Road and then the Silk Road 2.0 in November of 2014. The Silk Road is an online platform where illegal drugs are sold in exchange for Bitcoins. So is Bitcoin actually a currency? The recent case law has said that yes, it is a currency no matter what the IRS has said. The Security and Exchange Commission versus Brendan Shavers was a case about a Ponzi scheme where Shavers would take investments paid in Bitcoins to his company, promising a 1% return annually, and then take the next investor's Bitcoin money, give it back to the original investor in US cash, and then just like any other Ponzi scheme except using Bitcoins. Because Brandon Shavers used the Bitcoins to pay for personal expenses, the court ruled that it was being used as a currency and therefore could legally be defined as a currency. The same was decided in the U.S. versus Albrecht case, which is the Silk Road arrests. The court opinion release said that the defendant alleges that he cannot have engaged in money laundering because all transactions occurred through the use of Bitcoin. The court disagrees. Bitcoins carry value, that is their purpose and function, and act as a medium of exchange. Bitcoins may be exchanged for legal tender, be it US dollars, euros, or some other currency. Accordingly, this argument fails. So what have the scholars said? Some argue, and this is a very good case, that Bitcoins do not have a physical value and they're not backed by anything physically. The US dollar used to be backed by a gold standard, and the Bitcoin has never had anything like that. Also, the lack of regulation leaves Bitcoins open to any third party to come in and take control of the Bitcoin market. PC Magazine released a article about different malwares that are available, some for under $35, that you can shave Bitcoins off of any transaction or hack into Bitcoin passwords for Bitcoin wallets. Some proponents say that Bitcoin have the advantage of the libertarian approach to currency, where it has a government hands-off type of philosophy, where because there's no regulation, it can have natural growth without it being stifled. Also, there is some out there that say the technology for Bitcoins is advanced enough that it should be able to defend against any hackers or malware. The US government released through the IRS a answer to some frequently asked questions about Bitcoins. Through this, they explained how Bitcoins are seen as property and not a currency to the US government. Wages paid to employees using virtual currency are taxable to the employee, must be reported by an employer on the W-2 form, and are subject to federal income tax without withholding and payroll taxes. So meaning even though it is a property, it can be taxed like a currency if it is being paid to an employee. A payment made using virtual currency is subject to information reporting to the same extent as any other payment made in property, meaning that you would have to pay property tax on any Bitcoin or Bitcoin exchange. In conclusion, I believe that Bitcoin will increase in popularity and become a viable and accepted worldwide currency, but will see an increased regulation and government involvement. Thank you.